have to add cold water to cool it off.
Mm-hmm. Mm-hmm.
But it's nice.
Good. All right. Well, let's get started. So, good morning to everybody. Thank you for joining us. My name is Lori Obazinski. I'm the Director of Sales and Business Development for Rosie Salon Software, and I am joined by Kevin Lightheart and Sharon Moulder with the CPA firm Lightheart Sanders and Associates. And their team specializes in accounting and bookkeeping for salons and spas, and they're going to share some really great insights for all of us and helping our salons learn how to succeed with our finances. So we know that when it comes to your salon or your spa, it's difficult to know how to manage your money sometimes, and it can leave you with a lot of unanswered questions, like what expenses you can or cannot write off, and how would you plan ahead for paying your employees if you offer something like paid time off or PTO. So welcome, Sharon and Kevin. Thank you for joining me.
Yes, thanks for having us.
Thanks for doing this with us.
Yes. So how did you guys get started or find your way into the beauty industry as a CPA firm?
Great. I'm going to take this question and get us started. And Sharon, please add anything that I may leave out. We've been in the beauty industry for probably about 20 years total. We, back in, I guess, the early 2000s, we purchased a small practice in Mississippi that had a handful of beauty schools. And we did the auditing, audit and compliance, and also some tax and accounting work for some of these beauty schools. And we just kind of grew from there and have several beauty school clients throughout the country. And we realized probably 5 or 6 years ago that we were in a position that we should kind of springboard that into the salon industry because they're so interconnected. And so, especially the last 2 to 3, maybe 4 years, we've been trying to develop our reputation and name in the industry. And especially the last couple of years, we've really started to take off there. We recently joined a partnership with Cunity, if those who on the group that may know who Cunity is, and partnering with them to expand even further. I personally am the tax guy, and as we talk more of the questions that Lori has for us today, I'll answer most of those. Sharon is our accounting and bookkeeping expert, heads that department in our firm, and so she'll answer most of those questions. But that's kind of a little bit of a history of how we've got into the salon and beauty industry, and it's really a niche that we love and have developed and focused a lot of time and effort and resources on the last several years, and in the salon industry the last probably 3 or 4 years.
And that's where we met, is at Cunity the Phil event out in Scottsdale over in the spring. And we plan on going back again next year. So we hope that we'll be able to see you guys then too. And I'm sure you guys have found that the beauty industry is probably the best industry you're working with, right?
Absolutely.
Oh, I love working with, especially the salons.
Yeah.
It's just amazed me the level of professionalism and business minded that the owners of the salons are. They're very in tune with what's going on, and they want to learn and they want to do it right. And probably the best type of client I've worked with in my career is
and the passion they have.
Yeah, for sure.
I love it.
What type of salons do you guys find yourselves working with the most?
The ones right now are multiple salon owners. So people have a client in Nashville that owns 4 salons, have someone that owns a couple. It's like a spa salon. They do everything, aesthetics and all of that. So we have clients that way. We have single salon owners, people who maybe just bought the business. They work there and now they're the owner, and we're working with those folks to help them learn more about how things should be done and how to be successful as a business owner. And accounting is one of the most important things you're going to do. So.
Yeah. And
a little bit more about our firm. We're about 25 staff total that work. Most of them work from home throughout the country. We have someone in California all the way to South Carolina. Even though Mississippi is our home base or home office, we have clients throughout the country, like I mentioned. But our focus is small businesses. We don't have any major chain clients that have, several hundred, locations, whether it's a beauty school or salon. So, but those types, and that's the majority of the size of businesses in the country, as we know, but have unique challenges for those types of business, and especially as they go to multiple locations, it brings on additional challenges for accounting and bookkeeping. That's where we come in to try to help people succeed and manage all of that.
That's great. Okay. So when it comes to the type of business these salons are running, there's a 1099 contracted, business, and then there's a W-2 or an employee-based salon business. Is there one that you guys find that you either work with more or that you guys recommend?
Okay. I'll start with that. Well, Sharon, you could probably say more of what type most of our clients have, and then I'll talk about the difference between the two.
Yeah, most of the salon clients that I have so far are W-2 employees, and Kevin will explain the differences, but I think they're finding that way they can have control, maybe not the right word, but they can make sure that they're staffing properly, that people, are showing up for work every day. They can offer benefits and things like that. Versus contract labor, you're basically in business for yourself, and the owner of the salon doesn't really have a big say over your schedule and things like that. So I think it helps salon owners plan better and manage their salons better. So, and Kevin can tell us the differences.
Yeah. And a long time ago, I determined that the only true answer, right answer to any tax-related question is it depends. And so, but with that said, there's, the 1099 independent contractor versus W-2 employee, there's totally different dynamics in that relationship between the owner and the salon workers. Now, from a tax standpoint, a 1099 is a lot easier for the salon owner, simpler, less reporting. You don't have to do, quarterly payroll reports, and, payroll. Any business owner will tell you that payroll and employee-related issues is the biggest issue to deal with, and potential headache and pain. And if the W-2 is not right, if that paycheck's not right, you're going to hear about it right away. And so to have a good system in place and so forth is very important no matter what you do. But having, if your people are 1099 independent contractors, it makes it simpler from that standpoint. And there's less payroll tax, so you save taxes doing it that way. But as Sharon mentioned, having those people set up or structured as W employees, I think there's a better connect. When you're 1099, you're kind of, like Sharon said, you're your own business owner. You can kind of do your own thing, set your own hours to some degree, and there's less control from the salon owner because they're not an employee. And there's a risk involved if you treat someone as a 1099 contractor as opposed to a W-2 employee, and they should be a W-2 employee in some industries and some people that work for the salon. And if you're not treating them correctly, there's some risk to the owner. But definitely, pros and cons of each. But as Sharon mentioned, we see more and more salon owners, if they're not already, changing to the W-2 scenario away from the 1099 for some of the reasons we talked about. And I guess that's what we've seen. Sharon, anything else there?
No, it's just like Kevin said, you can't, I have folks talk to me about the differences, and I just explained to them that the definition of an employee is someone that you have basic control over. You set their schedule, tell them what to do, when to do it, how to do it. You offer them tools to do their job and things like that. Whereas a contract person, none of that should be happening. And if it is, then you're treating them incorrectly as a contract labor person. And that can be a problem.
If somebody's opening a new salon, I'm sorry, Kevin. If somebody was opening a new salon and they were deciding between a W-2 or a 1099, is that something you guys would be open to? Is like kind of exploring those differences with them and navigating which method might be the right way for them?
Yes, I would definitely discuss it with them. And today, I think more and more people are going towards W-2 employees, just because if you want to buy a house or a car or whatever, you have to file your taxes properly and have a W-2 or something to show that you're earning money through your business. If you're a 1099, it's a little more complicated for things like that. So,
Okay. Sorry,
and
Kevin.
the other thing we had talked, well, what I was going to say a minute ago was if any of the people out there listening to this want to discuss it further, how they have it structured currently, or discuss, in more detail the differences, we'd be happy to do that. But the other thing is, people that are independent contractors, it allows them to deduct things that they may not be able to deduct as an employee, and also to set up their own business and so forth. But a lot of them don't plan for taxes, and so when it comes to time, especially once the first year or two that they make good money, they time to do their taxes and they owe a bunch of money because they haven't set any aside, they haven't paid any in. As a W-2 employee, you're withholding as you go, as you know, and you don't have those types of surprises that you weren't expecting.
Yep, definitely. So for the customers that you guys work with the most, or for any really, what are some of the top concerns that they generally have for you, or some of their pain points that you're seeing when it comes to managing their money?
The salons so far that I'm working with, some of the big issues are, especially if it's a multiple location ideal situation. So there are managers and there are people working there, but the owner can't be there every day. And so maybe the money, the way they're handling deposits is not working out properly, and they're not really accounting for all of that. And maybe, they spend money out of the drawer and nobody's keeping track. Other things are, just scheduling and paid time off, which I think is one of our questions later. How to record things if they don't have a point of sale system, or they don't have one that is conducive to what they're doing. They ask us for ideas. So partnering with Lori and Rosie is going to help us, be able to offer something to our clients and say, hey, check this out, because some of them really don't know what to do, especially if they're new salon owners, or they just have been doing the same thing forever and haven't made a change because they don't know what to do. So a lot, just making sure financials are proper and that they're not deducting anything that they shouldn't as an expense, and just helping them with that. But a lot of them just don't understand that, and they look to us to help with that and get the bills paid and make sure on an ongoing basis they know how much is in the bank, what's going to happen next week, payroll, sales tax. You got to have money to cover that. So we help them think about that every week by sending cash updates and things like that to say, hey, you have this much in the bank and payroll is next week and you're going to owe sales tax next week. And so you need this much, So it just kind of help them plan and budget. Budgeting is a big issue with them. So we work with them on that.
Yes, salon owners definitely know they have to pay and plan for their inventory or buying their back bar items, right? They plan for those things, but planning for sales tax is probably not something that they're always top of mind.
Right.
Do you have anything to share on that?
Yeah, one of the things, not just in the salon industry, but they're included in this, is as we've been doing this, I've been doing this for over 30 years, and Sharon's probably similar. And one thing we see a lot with these small business owners is, as long as they have money in the bank, they think life is good. They don't look ahead. They don't plan. They don't budget. They don't have a good system in place. They don't have good controls in place. When things are going well, they don't plan and save for, the times like when COVID first hit, those types of things. They don't plan for those events. Back in 2008, we had several clients in the home builder and mortgage industry, and we all know what happened to that industry back there. And a lot of those clients of ours went out of business because they weren't prepared for that situation. And so that's, again, somewhere we can help budget, we can help do cash flow management and so forth. Sometimes the client, they come to us and say, I know we're making money, but where's it all going? Well, let's look. let's look and see where it's all going and kind of go from there.
Yeah. Do you guys find that people are still trying to manage their finances like on paper and pen?
Sometimes I do. Not so much the salon side, but other types of bookkeeping clients when they call. Or we've had some schools that are just getting started, cosmetology schools, and that I will ask them. My first question is, "How are you keeping your books now?" And I get this blank, big stare, like, you know,
Like, that's why we're calling you.
I can think on paper, and I was like, "That's not going to work for your audit. You have to have a complete set of books." But every business owner needs that. If you don't, you're probably not going to make it.
Mm-hmm. What do you recommend for them in that situation?
I recommend QuickBooks Online. It's just more efficient when you have an accountant. They can look at it. You can look at it. You can be on the beach, looking at your financials and seeing if you have enough money to stay another week or whatever. So it's very handy because we can allow them to pull financials anytime they want them. The way we do things is we're keeping your books on a real-time basis. So we don't wait till the 10th of the next month to do the bookkeeping for the prior month, because that's not helpful. I mean, it has to be done, but it's already over and there's nothing you can do. And if you do it the way we do, then you can monitor it. And all of a sudden you're like, wait a minute, what Monday we spent how much on advertising? Oh no, kind of thing.
So more real-time information.
Yes. But that's what we recommend is QuickBooks Online, and we recommend that they use a payroll service for payroll.
Okay. You had mentioned earlier about salons that maybe use the money in their cash drawer for some expenses or things, and definitely they do that. They'll take money out and a little, like a petty cash or some meals or supplies or things that they need. How do you suggest that they handle that cash payouts out of the drawer?
Cash payouts, that cash drawer should be treated like a bank account. Money in, money out. Where did it come from? Where did it go? So there has to be a system in place where you keep the receipts, and whether you send them to us or you enter them in QuickBooks yourself, they should be entered in a register, just like a bank account. So cash drawer is a bank account in QuickBooks. It's set up that way. So then once all the money's depleted, you should be able to add it up and see that you spent what you put in, and that it didn't just go somewhere and you don't know what happened, that somebody didn't need $20 and borrow it and not put it back or whatever. So the only way to have control over that is that way. And also making sure you are getting the deduction for those expenses, because without those receipts, it's really, you can't count it. You can't just take $500 petty cash and call it office expense. You shouldn't.
Right. And within Rosie, we have an option for payments in and payments out of the drawer, so they can manage that and track that there as well. So that's a very good point.
Well, and as accountants, we could pull a report and enter that in QuickBooks then.
Yes, definitely. Yeah.
We discourage our clients, no matter what industry, to not use the cash register as a bank account that's an ATM. How about that analogy? But if most people do, but to have a system in place, that's the key. Is have a good system in place and some controls in place. And maybe certain things that it's allowed for, and limit it to that. And matter of fact, we have some of our salon clients they're seriously considering not accepting cash at all. Just totally.
The Nashville guy with the 4 salons, he's going to stop taking cash real soon.
Because it can be a problem if you're not careful.
Right. Yeah. When we talk about expenses and what salon business owners can or cannot or should not be writing off on their taxes, what are some of those best practices that you guys recommend?
Okay. First thing that we preach is to keep your business and personal accounts separate. Too often we see where business owners are commingling those funds, paying personal expenses out of the business, or vice versa, where they're paying for some business expenses from their personal account or personal credit card for various reasons. And I understand that, credit cards, they get points for miles or rewards and stuff like that. But there's also business credit cards that do the same thing. And so that's the first thing we try to preach or to get our clients to do, is to keep things separate, business and personal. The other thing is, if you're not, and if you're paying some business expenses from a personal account, personal credit card, to change, immediately. So, because we don't want to miss something. We want to make sure we account for everything. We want to get every deduction possible. And if things are being commingled using different accounts and cards here and there, you can see how confusing it can be and how things can be overlooked potentially. The other thing is, there are some expenses that business owners are paying personally that they're not deducting, and they can. And so, like cell phone, the use of their vehicle, different types of insurance, maybe even a home office. The rules on home offices are a lot less stringent than they were several years ago. And so when in doubt, ask, is this something I can be deducting or should be deducting? And if so, let's set it up and run it through the business accounts so it's cleaner. If you're ever audited, knock on wood, that doesn't happen. But if you're ever audited, we want to make sure it's accounted for. And also, sometimes down the road, you may sell the business, and the potential owners want to have good, accurate information that's consistent and comparable and so forth. And so having it accounted for correctly makes a big difference there too. So those are the main things, is to keep things separate, and to and things that may be being paid through a personal account that are business related, let's change that over so you're not missing out on those deductions.
And you can always ask your accountant or ask us if we are your accountants. And also, if you don't mix business and personal, it makes my team's job so much easier. So in the end, it's going to cost you more money to get your bookkeeping done, because we have to sort all of that out. And then you say, oh, I forgot, it's the end of the year. I forgot to tell you, I bought this on my personal credit card. And when they find out they owe or something, then they start finding stuff. And then we got to go back and, make journal entries and do things. So it's a lot cleaner if you just don't mix them.
Mm-hmm.
Now, occasionally the business owner's out somewhere and sees something and got a good deal on something or a piece of equipment, and they don't have their company credit card or checkbook with them, and they got to buy it now. One of those things, they don't have a chance to go back or whatever. And those things happen. But if it does, immediately contact your accountant, bookkeeper, or whoever, and account for there so you don't miss out on it, and we can record it then and move on.
Right.
That's good advice. We talk about employee or W-2 based salon businesses and some benefits, and sometimes a great benefit for the salon service providers is to have paid time off for their PTO. Can you explain how that paid time off should be expensed, and what's the best way to financially plan for it as a salon owner?
Well, paid time off is really just wages. And to plan for it, they have to think about that service provider she's going to be gone, he or she, a week. And so they're not going to be bringing in any revenue for that week, but you're going to pay their salary or their wages, whatever you've agreed upon for that week. So you calculate how much revenue do they generate typically, and put that much money aside for each person that has PTO. I mean, that's the easiest way to do it, because then you're covering it and nothing's really going to change because you have that cash set aside. The other thing is, if your cash flow is great, then you don't have to worry about it. But I really suggest that you budget for that. That you have a fund, whether you just set up a savings account and transfer some money in there every week to cover PTO. We can help you calculate maybe what amounts you should set aside for that. So.
Yeah, budgeting for it is important. And the other is the timing of when the different people are off. You don't want a bunch of people off at the same time, because you can see the impact of that as opposed to having it staggered or spread out better. And of course, as W2 employees, you have the control over that. But yeah, budgeting and planning for it and scheduling it appropriately. Now, if they're meeting their goals as a worker and then your budget for the year should be fine. But the timing of when it happens and when different bills come due and whatever time of year it is, that's got to be planned and budgeted as well.
Mm-hmm.
I know I have a couple of salons, they actually, or did I fade out?
Yeah, just a little bit. What you said that you have a couple of salons.
Yes, that will actually close like over the holidays.
That's what I was going to ask. Yeah,
plan ahead, and so they get all that holiday hair stuff, nails, whatever done,
mm-hmm.
and then their clients all know, oh, they're going to be closed maybe this week or these 2 weeks.
Mm-hmm.
Then your staff can plan vacation around that if they want to, and you don't have the stress of everybody wants off at the holiday time, and you just want to get their services. So I've heard more and more of that lately. So.
Yeah, same. That's what I was going to ask you. So if they do that, and maybe they have a team of 20 people and they're all going to be off for the entire holiday week, do they start, like, would you recommend putting, because you want to, plan ahead, like you said, maybe do they like plan ahead in a different bucket so that they know throughout the year as they're planning how much they have to cover that week, or just keep it in their regular savings account?
They can just keep it in the savings account. I mean, I just think if you're going to be shut down, there are certain expenses you have to cover no matter what. You're going to be paid. So really, yeah, you have to budget. You could look at like, half of a month of expenses if you're going to be closed 2 weeks, and see, okay, I need X amount of dollars because that's what I usually spend every month set aside. That's one way you could plan. So there's several ideas that we could work with, but definitely help you calculate and put that in your budget. So you know that the month of December, your revenue might be up because it's the holidays. Maybe you're staying open a little later to get everything done so you can be closed. And so you just have to really plan and watch your money. And budgeting, I can't say budgeting enough, and follow the budget. Don't adjust it or change it because you decided you wanted to spend more money. Then you're not following your budget. So.
Good point. So what if somebody did not plan properly for PTO and they do have team members who are requesting some time off? Any suggestions?
That's a tough one.
That's a tough one. They would just have to hope that and work that they can get that money made up, or they're just going to be down a little bit during that period.
Depending on how much lead time, for that particular person, they may need work extra shifts, or you just say, okay, for this to happen, you need to do this either before and or after to help make up for it. But now that it shouldn't be the employee's fault that the employer didn't plan correctly. And if that employee has time off coming to them, so forth. But, just at our firm, our employees, anything over a couple of days, unless it's an emergency, they need to give us some advance warning. So we have people to cover the client's needs. May not be a cash flow issue, but maybe just be a work flow issue and meeting our clients' needs. And so having a policy in place like that, so it's not a surprise that they need a week off without any notice, but emergencies happen. So that's why, again, stepping back and planning for these is so critical in budgeting, so it doesn't come as a surprise. But when it does, if there's enough lead time, you can maybe have, like I said, have that person work a little bit extra, or say yes if you can meet these goals or whatever the situation may be.
Well, and also this happened during COVID. I had some clients that actually had money set aside and they were able to make it through COVID. They were grateful to get the supplemental money they got from the government, but they had enough money set aside that they were going to make it. So my thing is have a savings account. And, if you can save up 3 or 6 months worth of expenses, then you're going to be okay. Most likely everything will work out.
Good. Yeah, that's good. I remember when we did meet at Cunity and we talked about some challenges that salons do have. And Sharon, you were mentioning that at the end of their day, when they're not balancing correctly or their totals don't match their credit card transactions and things of that sort. So for any of our Rosie customers who use Rosie and Rosie Pay together for their credit card processing, they only have to add those totals into their software one time and they're going to match and balance at the end of the day just fine. But for any salons that maybe use a third party for their processing, they have to add those totals in both places, right? Once on their software to keep track there, and then they add it in again on their terminal before the customer is going to swipe their card. So for those salons that do it in that way, how do you recommend that they make sure that their daily deposits are matching, their credit card batch is matching, and cash deposited to the bank?
Okay, and this is a huge issue, especially when we get a new salon client. That's one of the first things that we look at, because if those are right, where's your, if you're short, where's that money going? And we recently discovered a new client. We just could not match their credit card deposits with the bank account. Like, their point of sale system had one number, the bank account had a different number, and then the credit card statement had different numbers. And then what they said was hitting the bank didn't match what was actually hitting the bank. And we're going back and forth with that credit card service provider. They can't explain it. So this client for years has not been getting all of their money, and nobody can tell them where it's gone. So that is one thing that we really check and make sure. Number one, if you're taking up cash, how much cash should have gone to the bank yesterday? We can pull up your bank account and go, okay, there it is. Or we can say, hey, your manager at this location hasn't deposited from yesterday yet. You need to call them, because most places should have a policy that money goes either that day or the next morning. It should hit the bank. And if it doesn't, then it shouldn't be laying around in the salon. I mean, in the past, I've known managers who borrowed the cash and didn't take it to the bank, and they think they're going to pay it back on their payday. And then all of a sudden payday comes and they can't pay it back. And then they're in the hole, and they keep doing this. And unless somebody is aware and watching it, it could go on forever. And you wouldn't know that you weren't getting all of your money. In my years, a lot of years of experience, I've had doctors' offices, restaurants, all kinds of business owners call me like, I'm working really hard, I should be making more money. And then we start looking at things and money's missing. And that's what's wrong. So it's really important to make sure that your report from your point of sale system, that the cash that it says you should have gotten is how much cash you got that day, and that cash went to the bank. The credit card should match, and that credit card money should go into your bank account. So you're checking that on a regular basis, and that's why it's just good to have a policy where you don't do cash paid outs. I mean, if you do, there needs, like Rosie, like you said, that you can enter all that. Then it should still tie, and we could say, okay, there was $20 that went to buy lunch for somebody that day or whatever. And we can see that, and we'll record that, and everything still ties. So I would say that is probably a major issue with all the salons. The one that we're working with now, I'm just can't believe they were on the phone for 3 hours trying to find out why it doesn't match, getting transferred to different people, and no one could tell them why.
Yeah, and that goes back
so long. $2. Some days it was over $100. And we've seen a lot of things, and we're the lady on my team that works on it. She called me. She goes, "Will you look at this with me?" I'm like, "Well, that doesn't even make sense." Nothing matches. So we got the client on the phone because they're new to us. So we're just, discovering these things. So anyway, it's very important.
Yeah. And most salon software companies have a cash drawer feature, right? Like within Rosie, there's a cash drawer. You could have multiples, you could have just one. And that's probably key to starting with just your cash transactions of balancing that is using that.
They just don't use it.
Yeah, how much money do you start with that each day? And then make sure you're using that cash transaction button when you're closing out your tickets, and then teaching somebody how to read their daily transaction, or for us and Rosie, it's a total sheet report, and how to read that to determine how much money should be getting deposited to the bank. But then you're right, there's the other piece of managing your credit card transactions, and did that make it to the bank, and does it match what for us it's your merchant track report, and what should be getting deposited and what is. So,
and the receipts from those cash transactions need to be right there with that paperwork for that day, because anybody can put anything in there. You know, I paid $20 for this, but maybe the $20 went in their pocket. You don't know. I mean, I'm not saying everyone's dishonest, but we all know that some people are, and things happen, and maybe they mean to pay it back, but have those receipts, make that a requirement that the receipts have to be attached so they know you're paying attention.
Right.
People see you're not paying attention, money's flying in and out of that drawer, and it's easy. You know, it's too tempting sometimes when you are desperate and you need some gas to get home or whatever that day, you know.
Yeah, sometimes it's just the system for some reason isn't working right. The information coming out of it's not for whatever reason, but other situations is situation that Sharon's describing where there's not good controls in place, and it's easy for someone to temporarily, whether they plan to pay back or not, as Sharon mentioned. So you want to have good systems in place and those controls in place to eliminate or reduce those potential opportunities that were normally honest and trustworthy people, because of a lot of times outside influences, emergency of some kind or whatever, and they see that opportunity and when they wouldn't do it otherwise. So
right. All right, we're gonna start to wrap up, but I have one last question: is what is something that you guys wish that every salon owner knew regarding their money management in their salon or their spa?
Well, the last thing I just talked about is one of them, is like probably a big one, and also just helping their staff understand their W-2. You know, like what does it all mean? Like a lot of folks don't understand. They want to ask their boss, like, how many should I claim, single or married? Well, you can't really advise them on that, so you have to refer them to their tax preparer to help them determine that. If they're contract labor, if you decided that's how you're going to run your business, then that's all fine. But to keep good people working with you, teach them, have some class, lunch and learn, where you teach them how to manage that and about taxes, so that that young business owner that just started out gets 1099s and she spends all the money and buys a new car, and then tax day comes and she finds out she owes a lot of money. She had no clue that she was going to owe money. And so have some system in place to teach new 1099 contract business owners what they should be doing, and help staff. That just helps you maintain a great staff, educate them and let them know that you care. Other things are just planning ahead, budgeting, so that I don't get the call like I can't make payroll, like my payroll just bounced. I've had that happen before. And so they weren't aware. Have somebody that's helping you manage your money and listen and budget and do the things that are going to make you successful. So.
From my perspective as the tax guy at the office, when we have new clients that are existing or in business, or even new business that are starting, the first thing I look at is what type of entity are they? How is their tax structure? And unfortunately, we see a lot of new clients that are Schedule C's on their 1040, the personal return. They're not an LLC or an S corporation, and that's the first thing we look at, or I look at, is what's their entity type and structure, their tax structure. And the other is the thing we talked about a while back in our presentation today, was some of these expenses that the business owner that either are not taken advantage of or not accounting for correctly. So I think those are the two main things I look at from my standpoint. Sharon handles the day-to-day accounting and bookkeeping, and having goods, and we've talked about this several times today, is having a good system in place, good controls, and using those systems and controls, overseeing them, looking at them, using them to do budgets and et cetera. So those numbers, okay, I got a good system and I have these good numbers, but I'm not looking at them, not using them to help me make decisions, whether it's short-term or long-term. And the best thing we can do is educate business owners. Okay, I have my P&L on my balance sheet. Okay, that's all good and good. And most of them just look to the bottom line. Okay, I got a profit, I'm making money. But are they really in a strong financial position? They need to borrow money for something. They want to buy a building maybe, or retire or sell. We can help look at that financial statement and make it stronger to make it look better from that standpoint. And or opposite forces sometimes. I want to lower my taxes, so I want less income. But if I'm trying to get a loan or sell my business, I want it to show more. But actually, the accounting and tax can be shown two different ways potentially, because of the aggressiveness on a tax return, but on a financial statement we give to a banker or somebody else, we may not be quite as aggressive. So the bottom line, it's all okay. There's nothing wrong with that. It's just different accounting principles and methods between tax and accounting that are allowed. But helping educate, whether it's the employees, as Sharon mentioned, look at my W-2 or fill out my W-4, help me with that, or a business owner. I have my financial statements. What does this mean? What is this telling me? How can am I in good shape or not? That type of thing.
Right. Yeah. Making sense.
And my team does that, monthly when we have a meeting with the owner, and we teach them how to read the balance sheet and the profit and loss and what all those numbers mean. One other thing that Kevin and I talked about Saturday when we were going over was, I see this often. People, they want to get a loan, but they have negative retained earnings, which income for your business. That means they've lost money. And a lot of that is because the way they handle like a line of credit loan that they may get or something like that. They see cash in the bank because they got a line of credit and they take money out. Well, they didn't earn that money. So they shouldn't be spending it on anything but necessities. And it should be just to get them through, and then they should pay that line down. And a lot of people will spend it for personal things. And then they call me the day they go to the bank to get a loan, and their banker says, well, you don't look too good. Your business is like negative and you're not making money. They're like, what do you mean I'm not making money? So
I got cash in the bank. What do you mean?
Right. Yeah. It's a little misleading.
Yeah.
So if anybody has questions, do you guys want to share your website or a way that they might be able to get in touch with you or find some more information?
I could share the website and mine and Kevin's email. Do you want me to just put that in the chat?
Yeah. Great.
Okay.
Do we have any questions that were submitted, Lori?
We do not have any questions. Wait, what about if they take off and they're working another job?
That's a good question. Part of it depends on the type of relationship that is. For example, if this is their main job and they're doing a side job, the main job should be prioritized. And then a lot of times, like, there's an employment contract between the owner and the employee that either doesn't allow this, or they have to get it approved before they can do a second job. So part of it depends on, is this their main job or not, and if it interferes with them meeting their goals and expectations. So this is the right direct answer for this situation. So and my guess is, if it was to take time off to work another job, they're not going to say that. They're just saying, I need time off. But it depends on the relationship you have with the owner and the employee, what kind of relationship they have. If they know that they're working another location or another job, whatever that second job may be. But one, they don't want to violate any kind of employment contract they may have. So they want to, if there's one in place, look there. And the other is making sure it doesn't interfere with what their expectations are there. Sharon, do you have anything to add to
that? Really, no. Unless you have a contract with them, You can't really stop them from doing that, but you can, you can limit, like make them plan ahead for takeoffs. If they want to take a week off and they let you know and they followed all your procedures and they want to work another job that week, you can't really control that.
Okay, we got the website and both of your emails shared. And then Sharon, this is a number that they can reach you at.
Me and Kevin, they just would ask for me or Kevin.
Perfect.
Yep, that's it.
That's awesome. Well, thank you guys both for joining me today
Yes.
and for all of this helpful information. I know that it's a lot of information, but it's definitely something that people should be paying attention to. So thank you again for being here. Enjoy the rest of your day.
Well, thank
Great.
you. It's
Thanks
great
again,
to
Laura.
have all that stuff that goes on in my head, be able to say it out loud.
I know. And we finished talking about some of our merchant tracking and statements, and we do have an upcoming webinar coming up on August 15th, where we are going to be exploring the merchant track reports that are available through Rosie and Rosie Pay. So that will be an upcoming event that we have. So it was perfect information. So thank you guys both and enjoy the rest of your day.
All right. Thank you. You too.
Bye.
Bye, everybody.